Welcome. In this segment titled Aerospace Demand and the Prospects for Aluminum, the Aluminum Channel shares with you the outlook for aircraft builds through 2023 as developed by the Teal Group Corporation and what that could mean for aluminum consumption going forward. Our special guest today is Richard Aboulafia, Vice President of Analysis for Teal Group. Richard writes and edits Teal's World Military and Civil Aircraft Briefing, a forecast tool covering over 135 programs and markets. He also writes publicly about aviation and defense, with regular columns in Aviation Week and Space Technology, AIAA's Aerospace America, and at Forbes.com. His articles have also appeared in the Wall Street Journal and Financial Times. And frequently cited as an aviation industry authority by trade and news publications, Richard has appeared on numerous television news and radio programs, including ABC, BBC, Bloomberg, Reuters, and CNN. And we now have the privilege of welcoming him to the Aluminum Channel.
Oh, it's really a pleasure to be here, and thanks very much to Kaiser Aluminum for sponsoring me here.
So Richard, we know you have some prepared remarks and data to share, but before we get started, with crude oil at a 5-year low, would you care to comment on what impact that could have on the overall aerospace industry?
You know, this is unquestionably one of the most important variables looking forward in demand. And obviously, when you see a sudden change like this, you automatically think in terms of what's this going to mean for markets. But it's sort of a complicated set of factors that have driven commercial jetliner demand to new highs over the past few years. Fuel is certainly one of the two biggest, but it's almost the relationship between fuel and the cost of capital. I've got a bunch of charts that I'd like to show you that speaks to these issues, and maybe that'll help you understand the whole issue of fuel and how it connects with jetliner production. First, I'd like to take you through just the top line level of demand for aircraft worldwide, and as you can see, it's another year, another record. Just a fantastic year. We're getting to about 170 billion in deliveries worldwide. As I said, another record. It's been several years now of setting new records. This is the strongest segment of the world economy in terms of manufacturing, in terms of value added. This is probably the best market I've seen ever in my 25-year career of tracking aircraft markets. The other thing is that's noteworthy is if you look at it last year, with apologies to AC/DC, we were back in black. It's good to see black ink rather than red because, of course, even though the aggregate market for aircraft output was humming nicely during the Great Recession, you can see that there under aggregate change in 08-12 and the compound annual growth rate in 08 through 12. 2013 was the first year where everything was functioning nicely and at least recording a little bit of growth. That was very welcome. Let me walk you through this because I think there's a lot of information perhaps in this chart, and it's good to sort of pay attention to some of the details. I think all of these data points could tell numbers, but could tell stories. But first of all, on the column on the left, you've got the dollar value of deliveries last year in today's money for each of the major segments of the aircraft industry. The next with the bottom lines for civil, military, and total, as you can see, about 170 billion. I should also mention that 170 billion excludes aftermarket, spare parts, and everything like that. Maybe that's of less concern to the metals industry because, of course, metals are mostly about new build aircraft. But from the standpoint of economic importance to the world economy, there's really more like $500 billion in economic activity going on a per year basis. If you include maintenance, repair, overhaul, sustainment, upgrades, everything like that, along with affiliated industries and businesses. And that's before you even get to airlines and airports and all the services we associate with aircraft. But the other columns show you what happened during the good years, 03 to 08, and then the not so good years, and then finally what happened last year. And again, we're back in black. But the other thing I'd like to draw to your attention is the biggest segment, the top one, large jets. A wonderful, dynamic, very metal-intensive part of the business. And as you can see, well over half of the industry is those large jets from Airbus and Boeing. And you can also see that this was the one segment of the civil market that just powered straight through the Great Recession. Basically you had all the factors in place for some kind of downturn, some kind of drop in jetliner output, and we actually saw accelerated growth. In total, during the 08 to 12 recession, we grew by 60%. That's pretty remarkable. And this gets back to your question about fuel. Because that was one of the two key factors that was different this time, that did not precipitate any kind of serious downturn in this business, and indeed, again, accelerated growth. Here's the history of the business in one easy chart. You look at the jetliner market, and we have, well, wild mood swings. Going back to the dawn of the jet age in the late 1950s, basically you have about 7 good years and 3 bad years with depressing regularity. Sometimes it's due to extraneous events like terrorism or a disease or something, and sometimes it's more fundamental to the industry, but we have cycles. And for the past 10 years, we did not have a cycle, nothing whatsoever. You can see, you add it all up between 04 and 13, we grew by about 10% per year, a little over 10% per year. A phenomenal performance, especially given the very negative macroeconomic environment that the entire world was experiencing. So they gave a cycle, nobody came. Now, if anything should have precipitated a cycle, of course, it was these numbers. You look at GDP growth and shrinkage rates. 2009 was the first year since World War II where not only did the world not grow, but it actually shrank a little in terms of economic output. It was painful. We all remember this. Some countries are still experiencing it. You can see the red numbers there for Europe. They've still been flirting with third and possibly even fourth dip recessions. It's not a pleasant story. It hasn't been a quick recovery. Now, traditionally, you forecast demand for jetliners. You start with this. You start with your GDP. That goes to passenger travel demand, and that goes to airline profits and yields. That goes to jetliner orders. That goes to jetliner deliveries. It's a fairly straightforward process, just takes a lot of math, that's all. And historically, if you'd seen something like this, we should have seen a nasty downturn. Not hypergrowth, but a nasty downturn. And we didn't. And that again gets to the question of fuel and the other factors. One thing it did affect, though, almost on plan, passenger traffic fell precipitously to the tune of about 10%. That's exactly the sort of number you expect to see when you have a GDP drop like that. And freight fell even worse. And since then, we didn't have a great recovery. We had an okay recovery, nothing that would rescue you from a downturn, historically speaking. But I'm happy to say we're kind of in a stable place the past few years. We've been just at a little over 5%, about 5.2, 5.3% in terms of demand growth in the airline business. And that's good because historically it's been at about that spot, 5% or so. And most people seem to agree when we forecast out that it'll probably continue. So the bad part is, yes, we did experience a precipitous drop. The good part is the system recovered very nicely. Now, another thing that worked just fine was that orders fell off. Orders, of course, took a real hit in 2009, 2010, exactly as the models said they should, because, of course, people aren't flying, airlines aren't making money, and therefore they stop ordering planes. But they've come roaring back. And more importantly, you never saw anything happening on the deliveries front. Just as you saw before, we just kept powering right upward at that 10% CAGR. Now, getting to the question of oil prices, as you ask, could there be a connection? Yes. Clearly, this is a rather unique economic downturn. It was the first recession in living memory where commodity prices stayed stubbornly high, especially fuel. Demand fell, but oil kept going. Oil is the other mystery to this whole thing. Now, of course, what we're seeing this year is this reduction from 90 and the last part of this chart to, well, nobody knows, 60, 70, 65, 50. I mean, no one can say for certain what the floor is under fuel prices, and that's what's sort of vaguely scary. But look at this in context. The other big contributing factor was interest rates. Basically, cash costs nothing, at least if you get it directly from your federal bank nearby or any central bank around the world. Interest rates are at a record low. hovering around zero. Now, that's something else that could change, and that's something else that bears watching, because at the end of the day, what really mattered is this chart here, the relationship between the cost of fuel and the cost of cash. For the first time, you had a massive disconnect. Historically, whether by accident or by design, you go back decades, these two numbers had kind of more or less traveled together in tandem. And all of a sudden, you have this big rip in the fabric of the economic universe. And think about that from an airline's perspective. Historically, if oil prices had been high, you'd love to replace those old thirsty jets you've got from way back, but you can't because capital is just so expensive and you don't want to go into debt. It's like buying a house in 1980. No one enjoyed that. It's exactly the same. And then, well, say it's the year 1997, something like that. And why refleet? I mean, yes, cash is cheap, you can get it, but why would you? Because fuel shows up whenever you order it at about $22 a barrel. Why not keep those old DC-9s from way back? What happened for the first time over the past 4 or 5 years is that airlines had an economic incentive to refleet, basically the high cost of fuel, and they had the means to refleet, to replace those old jets, because there was, well, no real cost of capital. Obviously the retail is a little higher than this, but still, you can see in relative terms just how cheap it was to get a loan for your jet. Now, the other factor is that, look at this from the third-party perspective, the people who are loaning the cash to the airlines to buy the jet, they've got access to all this cheap cash, courtesy of the local central bank. But where do they put it? Real estate suddenly seems like a very bad idea. Emerging markets, maybe not so much. Tech stocks, nah. Where do you put your money? And then you look at the history of financing jets. You got this hard asset, mobile, earns revenue anywhere it goes. It can be repossessed according to international law. And not only that, it's a great hedge against inflation. Terrific gift for Christmas too. Why not park your cash in the jetliner business? That's what a lot of people did. You look back at the last Farnborough Air Show a little bit earlier this year in July. This was the first air show I'd been to where the majority of orders didn't come from airlines. They came from financial houses, basically people taking their cash and parking it with jets. And on behalf of the industry, we're deeply grateful to have their cash. The thing that does scare me a little bit is that this happens once. You have this wonderful shock effect, this disconnect between the cost of cash and the cost of fuel. What do you do for an encore? And the other thing that kind of scares me, getting back to the question of fuel, any change is bad change. I like to joke that being 51 years old and having a pretty good life, the problem with that is that any change is bad change. I kind of like my life exactly the way it is. And well, look at this. Interest rates, if they change, they can only go one way. No one's going to pay you to take money, right? So if they go any direction, it's upward. That's bad. Fuel, if it goes up, well, that's bad from an airline profit standpoint. If it goes down, well, we're watching that happen now and getting a bit nervous. If it stays at 65, I think we're okay. I don't think it's a problem. If it goes much below 60, yeah, you're going to have a lot of airlines rethink. They're going to have them. They're going to say, get a really good deal on used jets out there that just aren't that much less efficient. And if fuel goes to 60 and interest rates rise, then there's a real problem. Then you have to cut back on rates. Thankfully, there are very few people out there saying that you're going to see a serious rise in interest rates. And you look at the economics of tight oil, which is really what's driving this reduction in price, the availability of new sources of fuel, particularly in North America, but perhaps other places too. A lot of it becomes less economic when you get down below 60. So that might be a reasonable floor. It might even be higher than that. There's a whole array of tight oil sources, and they're all economic at different prices. Some just don't work below 70 or 80 even, and some it's okay down to 50. So we're kind of working in the realm of art here, not science, when it comes to fuel prices. And there are a lot of experts with, well, different guesses. When you look at these two variables, a couple things to keep in mind, other than the dynamic that change is bad. One is that in terms of volatility, yeah, it's really all about fuel. There's a very strong argument that we're in for a long period of reasonably cheap cash, whether it's the demographics of Asia and saving patterns, or whether it's the absence of borders basically keeping cash from moving around the world. We're in for a long period of reasonably cheap cash. That's pretty certain. Fuel, though, boy, that's far more volatile. And that's where really kind of all bets are off. The new consensus is maybe 60 or 70 is the new 90, but no one could predict this, even the very best experts. So that's an area of concern, shall we say. The other thing is that there's a third factor that's not seen here, which is that other people's expectations for returns elsewhere might change. You know, you've had this environment over the past 5 years where, as I mentioned, you really couldn't put your cash anywhere else and expect anything like the rewards you were going to get from the jetliner business. But if something comes roaring back, whether it's an emerging market scenario, all of a sudden the BRIC countries get going again and all of a sudden start dragging cash away towards investment there, or whether it's simply that the U.S. stock market goes gangbusters in the midst of the recovery, we could see some of the enthusiasm for financing jets go away and have that cash dragged towards other investment opportunities out there. So that's kind of a third unseen variable that might affect this dynamic. Now, turning to our forecast, we tend to have what you might call a bit of a warm bath scenario. If we just keep going up another couple years of growth, modest growth, and then basically level off, I think we're okay in terms of aggregate demand, in terms of capacity in the airline market, in terms of replacement of earlier jets. This is kind of a dream scenario. And I think there's a strong argument for it. If you listen to the recent statements from Airbus and Boeing, it's pretty clear that maybe there's some rethink on going to rate 60 per month on the narrow bodies. And if you sort of just throttle back and keep going at a plateau that we reach in a couple of years, this is a recipe for a really great decade in terms of output. Not for every program, of course. There's always winners and losers. But in terms of aggregate output, this is a dream scenario. What could go wrong? Well, a couple of things, but obviously all related to the dynamic between fuel prices, interest rates, third-party investment opportunities. But also, what if we just kept going? What if the Airbus and Boeings of the world just get hubristic? They say, well, we dodged a bullet there for the last decade. Why can't we keep going up at 10% per annum? And in which case, we'll have higher numbers than you see in this chart. By the time it's 2017, 2018, you could be talking about $130, $140 billion in output. On the other hand, I think it's virtually certain that we will then engineer a pretty significant drop. In other words, we'll create the very downturn that we avoided. So I'm a little concerned about irrational exuberance in this business. I think it's probably time for moderation and caution, in which case there's a very strong argument for this dream scenario to happen and for the industry to enjoy an unprecedented decade of record numbers and low volatility. Believe it or not, I'm cautiously optimistic, but still wary. If you compare past decade growth scenarios, basically what happened between, say, 84 and 93 over the previous decade and all the other decades, a couple patterns emerge. One is that the market in aggregate grows by about 44%, which roughly corresponds to, of course, 4% per annum growth, which is perfectly in line with all of the other indicators. You can see the last decade, 04 to 13, relative to the previous decade, it was 41% growth, but wide bodies, twin aisles, they had a really underwhelming decade. A lot of that was basically people waiting for their Dreamliner. The 787 experience, of course, is well known, deeply unpleasant, and about 4 years or more in delays for most people. And that's probably the biggest single factor that suppressed numbers. But let's look at the situation moving forward for the next decade, which is everything right of that black bar right in the middle of this chart. If you freeze at today's rates, you get 54% growth, which isn't bad because, frankly, retirements will be higher. The jetliner fleet is aging. That's perfectly reasonable. I'm a little concerned about the catch-up there in twin aisles. Our forecast is higher than that, our dream forecast. Again, very sustainable, 64% growth in terms of, faster retirements of older jets and other factors basically moving towards more robust output. A little concerned about the wide-body numbers. What does concern me is if all of the OEM plans basically go forward and they get stuck in place. For example, Boeing is talking about maintaining output at 10 777s per month while ramping up to 10 787s and perhaps 12 and 14 per month, while simultaneously keeping numbers steady with 747, 767. All of that adds up to some pretty untenable numbers. If you take the OEM plans, you freeze them through the decade, you get 88% growth or about 106% growth in twin aisles. Something has to give here. Somebody has to throttle back at least a little bit. Our bet is that 777 numbers and A330 numbers tumble a bit as people wait for the next generation. In the case of the A330, it's the new engine option A330, which comes online around late 2017, early 2018. In the case of the 777, it's people waiting for 777X, which arrives sometime in the early years of the next decade, 2020, 2021, around there, which means you could have a couple lean years in those production lines. But everything else will still be growing, 787, A350, and of course the twin aisles, which are about 50% of production just for the twin aisles, a 737 and A320. Those two will be going full throttle through the decade. Let's look at the backlog values for the big jets. The first thing that hits you is that this is an extremely effective duopoly. You look at Airbus and Boeing, they manage their affairs very well. They launch products that people want for the most part. And they have also created what you might call a wall of volume. If you look at the sheer power of the numbers that we're talking about here, 1,200 jets per year and backlogs that are, well, approaching $1 trillion by value. Imagine it from the perspective of somebody, say, from Russia or China trying to break into this business. The orange slice you can see there is Bombardier, which is trying to break into this business with the C Series. You're up against that massive wall of volume. Look at it from a metals standpoint. Their ability to negotiate metals prices is just so much better because of the sheer volumes involved. The level of risk from a metals provider standpoint is so much lower because you know they have all of this work in their pocket. You're going to be eager to work with them. Other people, maybe not so much. Just the sheer economic throw weight that we're talking about here is the highest barrier to entry in the business. And they're able to take that economic power and translate it to very aggressive pricing, which keeps out newcomers. So it's kind of paradoxical. The market's getting bigger, but that means actually less of an opportunity for people to break into this business. It's not a question of more work to go around for more people. It's a question of the market gets bigger, and that actually creates kind of a Maginot Line that keeps newcomers out. I'll give you an example. Let's say you're a C-Series salesman from Bombardier. You go to see an airline and you try to price your jet. What are you pricing it against? Certainly not list price, because of course that hasn't been serious for a very long time. Is it the traditional price that you've got charged for all the other jets in that backlog? No. What you're trying to price against is the marginal cost to Boeing and Airbus of building another aircraft on top of the other 500 or 600 jets they're already building. What's their ability to discount that jet? Is it 60% off, 70% off? Walk into the factory and take anything you like? So Airbus and Boeing are getting even better and getting more strong in their ability to keep out newcomers. The barriers to entry in this business have never been higher, and they are getting even higher still. What's our expectation moving forward? The duopoly holds. Very simple. Boeing has an edge in terms of value of deliveries. This doesn't show ship sets moving forward. It shows value. Basically, it's a 55-45 market because even though Airbus has a bit of an edge in terms of narrow-body products, single-aisle products, Boeing has a significant edge in terms of wide-body products, the twin aisles. They have the 787 and 777 versus the A350 and the re-engined A330. So both in terms of size and in terms of order book so far, Boeing is nicely in the lead, but Airbus is doing just fine too. On top, you've got that thin slice of people trying to break into the business. Bombardier with its C-Series, that has not been a success, and there's reason to doubt their ability to bring it to market, but we're expecting them to somehow pull it off. Comac from China, Irkut UAC from Russia. Again, just niche products and probably more for their home markets than anything else. Now, I'd like to talk to you about a real sea change that we've seen emerge in the business over the past couple of years, and I think it has a profound impact on metals and the nature of the business. Very simply, a lot of things have been tried in this industry in terms of new technology. It's kind of a mixed history. Do composites really work? Nah, not really. You look at the most recent product launches, 737 MAX, A320neo, no composites involved there. 777X, yeah, there's a composite wing, but they're keeping the metal tube. The only thing that you can say about new technologies, and remember all the others that have been tried, more electric aircraft, distributed manufacturing systems, whatever, the only thing that really pays its way is a new engine, a new turbine engine. That's where you get guaranteed bang for the buck. Basically, it means guaranteed fuel burn reduction and a relatively straightforward engineering change, as well as a seamless fit into customers' fleets. If you break down the market, in this case, this is the backlog for all jets, into 4 categories, one being new stuff, new technology, A380, 787, A350, legacy stuff, basically stuff that's been in production for 20 years or more, A330, 777 being the 2 biggest, and then simple re-enginings, minor re-enginings, such as the A320neo or A330neo, and then complex re-enginings, like the 737 MAX. Look what's happening here. You look at the backlog, look at those 2 categories that deal with re-engining. They are becoming very big. Basically, now more than half of the backlog is for re-engined jets. It's a more profound story, I think, if you look at orders. This is the same breakdown, only by orders. Look at orders this year. Almost all of it is for re-engined aircraft. In other words, the manufacturers are now deciding that why bother launching all new products with all new materials? Let's stick with what we've got and put a new turbine on it. And they're meeting with tremendous commercial market success. As a matter of fact, if you were to take these sort of numbers and overlay them with what the manufacturers have to spend, you'd see this is almost a guaranteed recipe for profit for them. Instead of spending, say, $15–20 billion on a new twin-aisle jet, just taking a new turbine, say in the case of the A330neo, that's only going to cost them about maybe $3 billion, and it's going to produce some pretty darn good numbers. So this is a major change in the industry. And our expectation moving forward, as seen on this chart, basically re-engining is going to go from, re-engine models rather, are going to go from about 45% of output to, well, by the end of our forecast, it'll be overwhelmingly dominant. About 60% of output will be re-engined aircraft rather than all new clean sheet of paper design. I think there's a profound impact here on the metals business, almost all of it positive. And it's funny, you look at the regional market. This is the market for regional aircraft. It's a lot smaller. Compared to 94 billion in deliveries, you've only got about 6 or 7 or 8 billion right now going on. But look towards the end, that big checked area that you see, that's Embraer's E2. That is Embraer, the leading player in the regional aircraft business, getting smart and saying, we like what Airbus and Boeing are doing. We're going to take our existing product and simply put a new engine plus a modified wing on this aircraft, but keeping the same metal tube. We like the way it plays. We're not going to have to invest a lot in it, and they've been given, well, quite a few orders as a result. Commercial market demand is already well over 200 jets. In other words, this is an across-the-board trend for the entire industry, not just the large jetliners, but the small ones too. You know, I think when you look at what actually pays its way in this business, it's clearly turbines, and that's a secular trend across the board. And Embraer is the first regional manufacturer to realize this. If Bombardier were smart and they could find the cash, they would probably do the same thing, take their basic CRJ regional jet, re-engine it, and have another 10 years on the market at least. Now, turning now to the business jet industry, this is kind of an unfortunate story. In a lot of ways, it's third-party finance giveth and third-party finance taketh away. You look at the jetliner business, third-party finance loves jets as large commercial jets as something to finance. But then they looked at the business jet side and they saw exactly the opposite. They saw something that wasn't so mobile, that didn't earn cash, and that lost a lot of its value just after its delivery. So if it was repossessed, that's a major problem from a financing perspective. And if you look at the dynamic of the business jet industry during the Great Recession, it reflects that schism. Top half jets, those are jets that cost more than 25 million, Gulfstreams, Dassaults, Bombardiers. They didn't have any pain at all. They actually grew through this recession. And that's because most people who buy a top-end jet just finance it out of the company balance sheet. Or, frankly, in the case of ultra-high net worth individuals, it might just be with a Samsonite full of cash. You look at the bottom half, the more workaday jets, the Hawkers, the Cessnas, the Learjets, you're most likely going to purchase it with a loan. And that was, of course, a defining characteristic of this downturn, the absence of commercial credit. And that's what contributed to this catastrophic drop in bottom half jet output, 57%. That was easily the worst thing that happened to any market segment during the Great Recession. Nothing else compares to this. Most segments did just fine. Bottom half business jets got clobbered. As a matter of fact, if you look at the evolution of the aircraft industry during the Great Recession, there was only one corporate casualty, and that was Hawker. Hawker and now Hawker Beechcraft later on. The surviving bits of it are now a division of Textron Aviation, but they were the only aircraft company to actually go out of business as a result of this Great Recession. You know, in summary, the civil market has been a real success story for this business over the past 5 years. Far from flawless, obviously. If you made low-end business jets and regional aircraft, you didn't do so great. But the big economic powerhouse jetliners, for a variety of factors, really powered us through. And this looks set to be a strong market in years ahead.